You won't believe what's quietly happening in the silver market right now. While most people are focused on prices going up or down, the real story isn't about numbers. It's about supply. The global silver supply is under stress like never before, and what's happening behind the scenes could affect everything from electronics to solar panels to defense. In the next few minutes, we're going to uncover what the mainstream rarely talks about. Before we dive in, if you want to stay ahead of these developments, make sure to hit that subscribe button and click the notification bell. Join the Silver Reset community so you never miss a crucial update. And if you find today's video helpful, give it a thumbs up right away. It really helps us reach more people who need this information. The stress on silver starts far from the trading floor, in the mines and refineries that process the raw material into the forms the market actually uses. Mining operations are facing increasing challenges, from energy shortages to geopolitical restrictions, and even simple logistics are becoming bottlenecks. Countries that are major suppliers are adjusting export licenses, sometimes quietly, sometimes suddenly, and the ripple effect spreads across the globe. Factories and refineries that depend on a consistent flow of silver are already feeling pressure. And these disruptions don't show up in the paper market immediately. The truth is, even if prices seem stable for now, the underlying supply network is fracturing, and it's only a matter of time before reality catches up. Industrial demand is another piece of the puzzle that often gets overlooked. Silver isn't just a shiny metal for jewelry or coins. It's essential in electronics, solar energy, medical equipment, and even advanced defense technologies. As economies push for more renewable energy and advanced technologies, the need for silver has grown quietly but steadily. Meanwhile, production has not kept pace. That gap between rising demand and constrained supply is where tension builds. It's like watching a dam slowly develop cracks. The water may still seem calm on the surface, but underneath, pressure is mounting. One of the most striking factors driving this stress is energy. Many of the world's silver refineries rely on stable energy supplies to operate efficiently. In Europe, energy prices are skyrocketing and supply chains are fragile. Power outages, rationing, or simply rising costs can slow or even temporarily halt production. When a refinery can't operate at full capacity, silver doesn't reach the market, and the ripple effects extend worldwide. These energy-related issues may seem remote, but they play a critical role in shaping the availability of physical silver, and therefore its long-term value. Another layer to this story is geopolitics. Several countries with significant silver resources have recently made moves that tighten control over exports. Whether it's Mexico reducing its export licenses or Greenland impacting Arctic supply chains, these actions quietly remove silver from the open market. Traders and investors might not notice immediately because paper silver still trades freely, but the physical silver that industrial buyers need is disappearing. This is where the market could experience serious tension, even without dramatic price spikes. It's important to understand the difference between paper silver and physical silver. Paper silver includes futures contracts, ETFs, and other financial instruments that represent silver, but don't necessarily correspond to actual physical ounces in hand. Physical silver is what manufacturers, jewelers, and investors actually need. Even if prices on paper stay relatively calm, physical silver can be in short supply. And that's the story most news outlets and financial reports miss. At Silver Reset, we focus on uncovering these underlying realities so our viewers understand the full picture, not just what's easy to quote on a chart. As supply tightens and demand remains steady or rises, premiums on physical silver can increase. People buying coins, bars, or industrial-grade silver may notice that prices are higher than what appears on the paper market. This is a subtle but important shift. It's not about panic or hype. It's about basic economics. When supply becomes constrained, those who rely on physical silver have to pay more to secure it. And in many cases, the biggest buyers aren't everyday investors. They're industries. Governments and institutions quietly accumulating physical metal for strategic purposes. Another factor to consider is the long-term sustainability of mining operations themselves. Silver is often a byproduct of mining other metals like copper and lead. That means silver production is tied to the economics of these primary metals. When mining conditions or global demand for these metals fluctuate, silver production can change unexpectedly. At the same time, environmental regulations are becoming stricter worldwide. Some mines face operational slowdowns due to compliance issues or stricter reporting. All of these pressures create a fragile supply network that may not be able to meet global demand if stress continues. Logistics are also playing a role. Shipping delays, trade restrictions, and transportation costs can affect how quickly silver moves from mines to refineries to manufacturers. Even small delays can have compounding effects, especially when multiple refineries or industrial consumers are dependent on timely deliveries. These delays don't usually make headlines, but they are real, measurable stressors in the silver supply chain. At Silver Reset, we track these trends closely because they often precede larger market movements, giving our viewers a heads up before others notice. One of the most surprising aspects of this supply stress is how quietly it's happening. Unlike a dramatic market crash that captures headlines, these supply issues build slowly. They creep into the system unnoticed until a breaking point is reached. That's why understanding the fundamentals, energy, industrial demand, geopolitics, mining economics, and logistics, is so critical. Anyone relying on paper market indicators alone could be misled, because the numbers don't reflect the physical availability of silver that matters in real-world applications. At Silver Reset, we've been monitoring reports from refineries, mining companies, and international trade organizations to piece together a comprehensive view. The picture is clear. Supply is under pressure in multiple regions simultaneously. This isn't speculation or hype. It's a pattern that repeats across different countries and industries. And the consequences are not just for investors. They impact technology, energy, healthcare, and even national security infrastructure. Another important point is investor awareness. Many silver investors focus on price movements and short-term gains, often neglecting the physical realities of supply. When industrial buyers start competing for limited physical silver, it can create unexpected shortages and price premiums. Even if the paper market appears calm, these physical constraints will influence availability, cost, and long-term strategy. That's why staying informed about supply-side pressures is essential for anyone invested in silver or industrial markets. Energy, geopolitics, industrial demand, mining economics, and logistics. These are the building blocks of the story we're telling today. They're not flashy topics, but they're the ones that drive real-world outcomes. The best investors understand that market prices often lag behind supply realities, and that's exactly what's happening with silver right now. Understanding these fundamentals allows viewers at Silver Reset to position themselves ahead of market surprises, instead of reacting after the fact. It's also worth noting that technological advancements are increasing silver demand quietly. From solar panels to advanced electronics, medical devices, and defense systems, industries rely on a stable supply of high-quality silver. A disruption in supply, even if small, can slow production, create cost pressures, and ultimately influence global markets. These aren't abstract risks. They affect products, infrastructure, and everyday life. Now let's address the paper market versus physical market dynamic a bit more. Futures and ETFs provide liquidity and price discovery, but they don't always reflect the reality of physical supply. Investors relying solely on these instruments may underestimate how constrained silver could become for actual industrial or strategic use. Physical silver is finite, concentrated, and often controlled in ways that aren't visible on charts or financial reports. By focusing on these realities, Silver Reset ensures our viewers have a clear understanding of the market mechanics behind the headlines. We should also discuss what this means for the broader economy. If physical silver becomes increasingly scarce, industries dependent on it may face cost increases or delays. This can influence production schedules, pricing of goods, and even the timing of technological deployments. Unlike volatile price swings in paper markets, these supply-driven effects have tangible impacts on real-world industries and consumers. At this point, it is clear that silver is not just a commodity. It is a critical industrial asset under stress. Whether you are an investor, a manufacturer, or just someone following global trends, understanding the supply chain and its vulnerabilities is essential. The story unfolding is complex, but the takeaway is simple. The global silver supply is fracturing, and prices aren't fully reflecting that stress yet. As we move toward the conclusion, remember that staying informed and prepared is always better than reacting late. Silver Reset's mission is to provide insight, context, and foresight so our viewers are ahead of the curve. The supply situation won't be obvious in the headlines until it's too late, but by understanding the forces at play, energy, geopolitics, industrial demand, mining constraints, and logistics, you're already ahead of most of the market. Before we wrap up, if you found this analysis valuable, Don't forget to like this video, share it with friends or colleagues, and leave a comment below with your thoughts. Do you think silver supply will tighten faster than expected? Or do you see solutions emerging in the next year? Your engagement helps Silver Reset continue producing high-quality content that keeps everyone informed and ahead of the curve. In summary, the global silver supply is quietly under pressure. Prices may not yet reflect the stress, but the building constraints in mining, refining, energy, logistics, and industrial demand are real. Understanding these fundamentals allows anyone to make better informed decisions, anticipate market trends, and avoid surprises. This isn't hype, it's reality. Silver Reset will continue to monitor the situation and bring you updates as they develop, giving you the knowledge to navigate this critical market confidently. Thank you for watching, and remember to subscribe, like, share, and comment. Staying informed is the key to staying ahead, and at Silver Reset, we make sure you are always ready for what comes next.